What's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades, the home of the #1 stock market trading and investing channel on all of YouTube. Have you ever seen the movie The Big Short? The movie about Michael Berry, a doctor and a fund manager who figured out the housing market was about to crash, and he made a boatload of money betting against the housing market. Everybody called him an idiot. Everybody said the housing market is stable. It doesn't ever crash. But he stuck to his guns and he made billions of dollars in profit from it. Well, I see the exact same thing setting up right now. I call this the Big Short 2.0. So in today's video, we're going to be talking about why I think the housing market is in a gigantic bubble that is about to burst and how I plan to make a load of money from it. I plan to profit from the housing market crash. I know that may sound bad, that may sound like I'm taking advantage of other people's misery, but when you're talking about investing, you gotta be a shark. If you're a guppy, then you're not gonna make it in this game. You gotta be a shark and take advantage of the opportunities that are presented to you. And the biggest opportunity out there right now, in my opinion, is the coming housing market crash. How I came up with this thesis, this idea that the housing market was going to crash is a few months ago, I got an email from a mortgage lender. They said, your house is worth X amount of dollars and we would like to refinance you with this BS adjustable rate mortgage. And the price that they said my house was worth is almost double the amount that I paid for it just a few years ago. So I thought to myself, how can this be right? We're in the middle of an economic crisis where we have a global pandemic. How can my house be worth 100% more than it was just 5 or 6 years ago? So I started doing some research. And what this company is doing, who is presenting me with this refinance offer, is they're trying to me in my without any Vaseline. They're not even going to do me the big favor of using Vaseline when they try to. So I do some more research and I see that the housing prices are at all-time highs, not even close to all-time highs. They ran right through it. And this is happening due to a shortage of residential houses. Now, this may seem like a good thing for the housing market, but it is not good. And that's what we're going to be talking about in today's video. And as always, if you're new to the channel, consider subscribing and hitting that notification bell. Everybody go down there and hit that like button for me. You know who's not trying to you in that? That would be Webull. Webull is going to give you free money, 2 free stocks valued up to $1,850 when you sign up with the link in the description. All right, let's break down the impending housing market crash and how we can make a boatload of money from it. Let's get it. This video is brought to you by Touchdown Trades University, a 3-in-1 stock market trading and investing course, which includes lifetime access to the chat room where you get my buy and sell orders in real time. Check it out. Link in the description with a $50 off coupon. All right, to understand why the housing market is going to crash, we need to go back, we need to hit rewind and go back to the 2008-2009 housing market crash. Now, I actually think the upcoming housing market recession or pullback, whatever you want to call it, is going to be more of a perfect storm than the 2008-2009 housing market crash. Why? Because in 2008, 2009, the underlying economy was actually pretty good. Basically, you had a bunch of people who were not qualified to buy homes. You had, if you watched The Big Short, you had strippers, you had waitresses buying 2-3 homes, and they were buying these homes using what's called an adjustable rate mortgage. So let's call these pool of people, these dots in this circle, these are the people who should not be buying homes. And the mortgage brokers, they knew that they could get these loans passed, and they were making commissions on these loans. So they just pulled them all up. They gave out everybody who wants a loan, and they were all adjustable rate mortgages. And the way an adjustable rate mortgage works is it starts out at a very low interest rate, so you can afford a very expensive home. But when the Fed raises the interest rates, your mortgage payment, your monthly mortgage payment goes up with it. So when these people first bought their home, the payment, let's call it $500 a month. A few years later, because the economy's good and the Fed's raising the interest rates, the payment may be $2,000 a month. And those strippers and those waitresses and just people who couldn't really afford to buy a house, they could not afford to make those higher payments, which in turn, they all started defaulting on their loans, and the banks who own those mortgages collapsed. Now, I do see something similar happening with these residential loans, people buying houses they can't afford with adjustable rate mortgages right now, but it's more of a perfect storm. Let's talk about why. All right, let's talk about my equation that leads me to a result of crash. Okay, so we have the Rhinoceros Rex come into play, and one would think that could have caused a crash by itself, but it didn't. Why? Because we had the mortgage companies offer forbearance. A forbearance is they're basically saying, okay, you don't have the money to pay your mortgage. We'll give you whatever, 6 months where you don't have to pay any mortgage. You can get back on your feet, look for a job, and make your payments then. So we have the Rona, which also has affected commercial real estate, office complexes. So nobody is going to work in their office anymore, leaving tons of these office complexes vacant. Now, right now, these landlords, they're looking for new tenants, but I hate to break it to you, there's not going to be new tenants because these businesses have learned that they can trim the fat, scale down, have their employees work from home, work remotely, and they don't need all these big offices anymore. We have residential housing prices at all-time highs, even though we're in the midst of a global pandemic. The housing markets are still at all-time highs. Why? Because there's a shortage. There's a shortage of decently priced residential houses. That's why you drive down any suburban neighborhood street, you'll see these builders throwing up these box cookie cutter homes. I see it around me everywhere now. And that is because these builders know they can sell these cheaply made builder grade houses for a huge profit right now because the housing market is so high. Interest rates at all-time lows. This is another huge part to the equation because these interest rates are extremely low right now because the Fed is propping the market up. But when the Fed does indeed have to raise the rates, what's going to happen? The same thing that happened in 2008, 2009. People who are buying homes they can't afford with adjustable rate mortgages, those payments, their monthly payment is going to climb, resulting in them defaulting and foreclosing on their homes, which is going to send this thing tumbling down like a house of cards. Here's a graph of the housing prices in the United States, the average price of a home in the United States. Back when I bought my home in 2012, the average price was like $160, maybe $155. And right now, the average home price in the United States is $307,000. That is an almost 100% increase in just a few years. That is insane. And people are buying. People are still buying homes today. And they're buying them with extremely low introductory interest rates with adjustable rate mortgages. All right, let's talk about how we can profit from the impending housing market crash. It's just too much happening all at the same time for me not to think there's going to be a housing market correction. We have housing market prices at all-time highs, plus mortgage forbearance about to end, plus extremely high unemployment rates still, plus all-time low interest rates, plus commercial real estate not being rented out, office complexes not being rented out. Once those interest rates go up a tiny bit, the whole thing falls. It's like a stack of dominoes falling down. The first way I'm looking to attack this is by just buying put options or shorting the overall market, the S&P 500, the SPY. We can see last time we had the housing market correction back in 2008. The SPY went from 160 down all the way to almost $60 a share, losing almost 2/3 of its value. So one way I'm looking to make money, make profit off of this is buying the 2022 put options at the money, $400 strike put options expiring next year, 2022. Now, what's great with put options is you can roll them over. Say the market's just chopping around, you still expect it to pull back, you can just keep rolling them. In the movie The Big Short, one thing that affected these traders who did take a position, a short position on the housing market, Michael Burry, for example, was the fact that you have to sit there and wait for it to actually happen. And it's going to take some time for it to evolve and everything come together and for the trade to work out. And he had all his capital tied up in this trade, and it was kind of eating at his bottom line. So that's something that we do need to be cognizant of and aware of, is the fact that this is not going to happen tomorrow. It maybe won't happen 6 months from now, may not happen a year from now. So I don't think this is something you want to put all your capital in, but this is something that I'm definitely starting to attack right now. A more direct way to profit from a housing market pullback is to short sell REITs, or stocks that are composed of real estate. I know a lot of new traders and investors look at short selling as a bad thing. They look at short selling as something only big hedge funds and big institutional traders can do, but that's not true at all. Everybody can short sell stocks. No matter what broker you have, you need a margin account, Robinhood, Webull, TD Ameritrade, you can short sell stocks. Doesn't matter if you have $1,000 or $5 million, you can short sell stocks. One stock I'm looking to short sell or bet on it to go down is this ticker symbol EQR, Equity Residential. Equity Residential is a REIT that owns a bunch of upper higher class apartment complexes. When the housing market crashed last time, EQR was trading up near $60 a share, and it crashed all the way down under $20 towards $15 a share, losing more than 2/3 of its value. So if you got short up here last time and you held all the way down, you made a truckload of money. Another stock that I am interested in short selling is this ticker symbol BDN, Brandywine Realty Trust. This is another REIT, but this is a REIT involved in commercial office complexes that I think is about to get crushed. We can see last time the market crashed, it was trading up near $38 a share, and it crashed all the way down to $3 per share, losing more than 80% of the stock's value. I expect something similar to happen over here. We're trading at $12, and if we can correct back down to $4, we stand to make a killing. I know it's not necessarily a fun and sexy thing to bet on the housing market to go down, but we are investors, and I really don't care. I don't care about the ethics. The only thing I care about is the bottom line, and that's that the mortgage bankers, the big brokers, they're trying to take advantage of the everyday person. So when they get hurt, I'm going to take advantage of it, and I'm going to short sell the hell out of some real estate stocks, and I'm going to make profit from it. That's going to wrap up the video, guys. I hope you got something from it. If you did, do me a favor and hit that like button for me. Check out the link in the description for Webull if you want to get your free stocks. And check out touchdowntrades.com. I'll catch you guys in the next one. Until next time, peace.
Rage on that beat, going crazy.